Good afternoon, everyone. This is Dr. John Huey from Tarpon Turtle Healthcare. Thank you for coming to I Stand Corrected. This is our first year doing this podcast, and I'm very excited to do this. We have all kinds of interesting guests, from health professionals to business professionals, and it just so happens we have an excellent business professional here today, Mr. Jim Stojak, whom I have known for the past couple of decades. He and his wife, Robin, are friends of ours from way back when the kids were little and played sports together. So I'm happy to have him here, and he is from Palm Harbor Mortgage Advisors, and he's going to tell us a little bit about himself and also about his business and what makes him super special, and that's why he's here today. So, Mr. Stojak, thanks for being out here today.
Hey, you're welcome. Thanks for having me.
Oh, you're very welcome as well. So just tell us about yourself personally, family, that kind of stuff, and then we'll hit the business stuff afterwards.
Yeah, I grew up in Lewiston, New York. It's good to know a little bit about my background and DNA. Grew up in an Air Force family where my dad served 20 years, retired Air Force in the Korean and Vietnam War. Just passed away last year at 88. Good genes. My mom, a Christian lady. So again, our household was a good foundation for me growing up as a child. Personally, my background, 18 years prior, I spent on Wall Street managing both trust and brokerage divisions. So my background is basically finance. In the last 21 years, I've run my own mortgage practice. So I have a master's in finance, an undergrad in business. So really my background is numbers. I'm a numbers guy.
Okay, excellent. How long have you been in this area?
Been in this area 23 years.
Okay, and you're doing this all by yourself, right?
Pretty much.
Maybe somebody else you want to introduce as well that's helping you out.
Yeah, no, we'll get into that a little bit later. But yeah, the uniqueness is, we'll talk about it. My wife runs a loan processing company. I run the origination. So everything we do is really family owned and operated. So it's in-house. We're unique from that perspective.
Okay. And you have how many kids?
3.
All right, excellent. So with respect to the mortgage business, because obviously people are noticing that the mortgage rates have gone up, interest rates have gone up, and tell us about your business, how you do things, what you do as far as what kind of mortgages you offer.
We do your traditional, conventional USDA. The vanilla ones are out there, but what I built my craft is basically what I call hybrid loans. These are abbreviated loans that are light doc, no doc. They're geared towards a self-employed borrower who writes their income down. And a good example is last week we closed on a bank statement loan of 12 months. We used 12 months of bank deposits and took an average and backed out an expense ratio to come up with an income number. Okay. And we were able to get them a loan from that perspective. So again, it's an abbreviated type of loan, but I call them hybrid loans.
How would that differ from the normal loans that, let's say, banks provide to people?
Yeah, if they went to their bank, they get turned down because those are full doc loans where these folks on the self-employed side are writing their income down. A good example, I had a doctor last year made $1,875,000, and when you looked at his return, he showed a loss of $37,000. So went to his bank, got turned down, came to me. I was able to put together a bank statement loan based on business deposits over an average of 12 months.
Okay, so a lot more paperwork at banks, for example, and a lot more difficulty dotting your I's, crossing your T's, getting all the paperwork done so that they accept it. All right, well, that's important. And the type of loans you offer are commercial, residential?
Yeah, I'm basically a lender. I lend commercial, residential. I also do some business loans. I'm basically a money guy. So if somebody has a money need, they go to their bank or credit union, they're turned down, that's a good referral for me. If somebody's told no, that's a good referral for Palm Harbor Mortgage Advisors.
All righty. So let me ask you this question. What are you most pleased with respect to your professional accomplishments? What would you say is, you can hang your hat and say, I do this. What makes you most proud?
Well, one thing going back in my career when I worked on Wall Street, had a big company I was working for, big responsibilities, a lot of employees. We just had Ryan, our first child. I went back to night school 5 years and got my master's in finance. It was a huge accomplishment, a big struggle coming home from work and going to school, coming back at 1 or 2 in the morning doing homework for a 5-year period. So that's probably one of my most favored accomplishments as far as my work history.
That's good. Well, that's excellent. So you have, you said Ryan. What other kids you have? You have 3 kids. Who are they?
Lauren, who's out in L.A., she's a software engineer for IBM. And Kylie, who just started at Tampa General, she's a registered nurse.
Okay, very good. The mortgage business with respect to loans now and with respect to interest rates. That's what I want to say. Tell us what's happening with interest rates now, how that's affecting people, and what you can do to help people that are maybe afraid of, biting the bullet, buying the house because they think the interest rates are too high right now.
I always say buy the house and date the rate. The rates aren't going to be up there forever. So, rates are certainly at an all-time high in the last 3 years. We're not in the 3 or 4% range. We're still around the 7% range. But again, you look at what the Fed's doing, the biggest misnomer is short-term rates have nothing to do with mortgage rates. It's inflation and mortgage rates kind of run lockstep as far as up and down. So the last reports, inflation was coming out with better numbers. Rates are starting to tick down. But again, the thing is buy now. And the reason being, once rates come back down, let's say in the 5 or 6s, you're going to have a feeding frenzy on more buyers and less supply out there. So you're going to have more competition. Right now, the competition is not there to buy a house. So I would say jump in right now. You can always refinance your mortgage down the line, but ride the appreciation. They're predicting over 10% appreciation in the Tampa Bay market this year. CoreLogic has come out with that number, so it's a pretty strong number.
That's excellent. And for those of you who don't remember, because we're older, back in the early 80s, the interest rates were in Canada were 21% before I moved down here, and I think in the States were 18%.
Yeah.
So this idea of a 6 or 7% rate, although it's shocking compared to half of what it was, or twice of what it was just a few years ago, is still pretty desirable compared to historical data out there. As far as you were talking at one of our meetings recently regarding the inventory. Mm-hmm. Tell us about what's happening with the inventory nationwide and in this area in particular.
Yeah, our average right now is 2 months. The normal should be 6 months. And let me just back up a step too. I think it's a great time to buy right now because sellers are giving up concession. As you know, a year ago or back in the pandemic era, we were paying a bit over ask. We were paying $20,000, $40,000, $50,000 over the asking price. Mm-hmm. Right now, the sellers are giving up concessions to the buyers, meaning they're paying their closing costs, they're paying to buy the rate down. So even though rates are a little higher, it's an opportune time to buy now because, again, there's not much competition. Once rates start trickling down, we're going to be back to 10, 12 contract bids on a house over a weekend. So it's going to make it tough to get that house at that sustained price. So I think it's an awesome time to buy right now.
And how many homes are available right now nationwide for sale?
Yeah, that number was like 480,000. It's at an all-time low right now. Wow. Again, because most people aren't selling because they don't want to trade up for the interest rate. They're at a 3% or 4% or 5% locked in. So they're reluctant to sell the house to go into a 7% on a new house. So that's why, for the most part, the inventories are low right now.
That's interesting. And they're just not building as many new homes, or the ones that are being bought? I know that there's certain large corporations that are buying a lot of single-family homes and then forcing people to rent from them. How much of an impact does that have on the inventory?
Well, the tough part is, as you know, we're in a landlocked Florida. There's not a lot of land to build on. Most of it's, wetlands, so they're protected. So the new construction out there is really at an all-time low right now.
That's interesting. You also mentioned other products and strategies you have for people, let's say, that are looking to not sell their house right away, but what is that now called? The reverse mortgage. I know you were talking to that to our group recently. Tell us more about that, because I'm sure a lot of people out there listening would be interested in that type of thing, given the demographics of Florida. And give us some information on that.
Yeah, just kind of in a nutshell, you have to be 62 years of older. Most of these folks are living from paycheck to paycheck on a fixed income, and they probably don't have a mortgage on their house. We're able to refinance, either pay off the mortgage, or basically give them cash back. In both cases, they're going to get money dumped in their lap in 2 different occasions. On the first closing, they're going to get half the money. A year later, the other half. So this is going to allow them to really enjoy the rest of their life, because they're going to have monies coming in where most of these people don't have a life savings. They didn't plan for retirement. They have a 401k or an IRA. So that equity in their home is really all they have left to kind of supplement their income for the next maybe 20 years or so.
So you see these advertised on television, famous guys that are pushing this right now. Are there safeguards for this? Because I don't know are there government hoops you have to jump through as far as regulation, that type of thing. How does that work so that people are protected? Because I can see that people may be reluctant because I think that it may not be kind of like the Wild West out there with getting this money. So how is it regulated from a governmental standpoint?
No, it's a great question. The federal government regulates the product. I mean, years ago, we had financial planners taking the money out and invest in the stock market. Riskier than heck, right? So they put a lot of compliance measures in place. So, basically, this product is governed by the federal government. The client has to go through an hour consultation before they even come to me for an application. It tells you all the pros and cons of the program. And we did one about a month ago with the financial planner. He said it was probably the best training he's ever been to as far as explaining the product. So again, the safeguards are really to protect the consumer.
And that's not given to them all at once. It gives them they're given the money in two chunks, so to speak.
Right. They're going to get a good portion of it the day of closing. Then a year later, they're going to get the remainder of it. And that's really in the form of a checking account. They can sit there, they can use it or not, but that money is going to be available a year from now, the balance of it.
Okay. Because obviously those are people that don't have any savings, as you said before.
Right.
And if they just aren't wise or prudent with the money they got, they're going to be in trouble again. And then once that happens, and so when they do pass, what happens with the home there?
Well, basically, the heirs have 6 months to either buy it or refinance it or sell it. So they're given time to go out there and make a decision. It doesn't have to happen overnight. So in most cases, the heirs are going to probably sell the house, but they have a 6-month timetable to do so.
They've got time to check that out. Mm-hmm. All righty. So if anybody has any questions on that, then definitely you can touch base with Mr. Stojak, and I think that'll be something that you'll probably get some calls on, because it's a big issue, and they always see those ads on TV. Who's the guy that's doing it? Oh yeah, Magnum PI was the guy there. So with respect to your style of business, you like to do this on the computer, hands-on, face-to-face. How do you like to conduct business historically?
Well, again, being that we're family-owned and operated with 2 different entities working together, lockstep each and every day, our files are reviewed every morning, so we're not farming out, the processing to a third party. Things aren't getting lost in the shuffle, and it's very important because the loan process is very tedious from start to finish. So I bring in the loan, I originate it, I talk about what's important to the client, I profile them from my Wall Street days, find out about they have wills and trusts, they have life insurance for death purposes, that they're saving for college. I mean, I go through a whole gamut of questions of trying to find out as much about the client as possible. Then I hand it off to Robin Kill, our marketing, where she processes the loan, takes it from that point to underwriting to close. So again, we have a nice assembly line built in place where, again, you have husband and wife working the loan from start to finish, so we don't lose touch with reality and what's going on with the loan. I think that's important because we continue to close one loan at a time, on time.
I love that saying. Yeah, one loan at a time, on time, which is fantastic. Origination, explain that, because everyone says, origination. What does that mean specifically?
Well, basically, when I get a call from a prospect, I'm calling them and finding out what's important in their timetable in the house. So we'll basically come to a solution about what term is going to be appropriate. It's not always a 30-year term is going to be the most appropriate product for that client. So it could be a 15 or 20, or it could be an ARM based on short term. So we go through, again, some Q&A and find out really what's important to them as far as a product. And obviously we talk about, closing costs. We talk about everything that's on the front end of the loan, so they have a good education before they pass go, and they understand what they're getting into before they sign paperwork. And
the difference between a regular loan and the ARM, the adjustable rate, can you explain a little bit about that? Because you throw terms there and acronyms, and I think maybe some of the people don't know exactly what they mean. And some of the ones you're using, I don't know what they mean either. So.
Yeah, a 7-1 ARM, basically, it's going to be fixed for 7 years, then it's going to fluctuate year by year after the 7th year. And it's tied to an index, so somebody, as an example, looking to stay in home for maybe 5 years, that may be an appropriate product. Right now, we have an inverted yield curve. I'll throw another term out there where short-term rates are higher than long-term rates, so it doesn't make any economic sense to go into an ARM right now, where years ago it may have made sense, but now the fixed rates are more advantageous than the adjustable rates. So there's no advantage of going with an adjustable.
So short-term rates are lower than long-term rates?
Short-term rates are higher than long-term rates. That's an inverted yield curve.
Okay. And that means you don't want to have a short-term adjustable rate?
Well, they're higher than the long-term. There's no benefit. So you might as well go with a longer-term rate and have a fixed rate for that period of time, whether it's a 20, 25, or 30. It's set for that timetable, where an adjustable is going to adjust after the 5th or 7th or 10th year. So there's obviously an associated risk with that product.
How long do you have to wait? So you get a mortgage that you say you buy the property and you date the mortgage. How long does that dating have to last? Is it you can get a new mortgage 6 months into it, a year into it? What are the rules? Are there rules?
With government loans at 6 months, you have to make 6 payments on time. With a conventional loan, it can be right away. You can refinance, 2-3 months down the line. So, but again, it's got to make economic sense. You got to run the break evens or the closing costs. What's involved with the cost itself. So it doesn't always make sense to refinance because rates have dropped maybe a percentage point. But that's what I do. I run the numbers for the client and make sure they understand the break even of that new loan. Well, how much it's going to take to get to square zero.
About closing costs and such, you mentioned at a different talk you were given that back to the reverse mortgages, that there's something that you do that's different than other companies as far as being able to save your customers money. Explain that for me, please.
Most originators charge two percentage points up front. It's called origination fee. I waive it because that's putting more money in the consumer's pocket.
So you don't charge the 2% at all?
No.
Okay.
I make my money in the back end, which they do as well, but they're also making an additional fee by charging 2 percentage points up front. It's called an origination fee. But again, I take that away. I give it to my consumer. It's money in their pocket.
Well, that's huge. That's a very good thing. Very nice of you. I'm sure you get a lot of Christmas cards because of that. Anything else you do special with respect to regular, now they know the term, origination of mortgages that aren't the reverse ones, just regular home or commercial ones?
Yeah, we do. Like I said, I do a lot of out of the box. I mean, if I don't have an answer, I probably have somebody I know from my Wall Street days that can do something. I've referred stuff around the country for different situations. I get a lot of calls of different oddball. I call them oddball type of loans, but that's kind of my reputation out there. Where again, if you're going to your bank, your credit union, maybe your other mortgage broker, and told no, they're going to come to me, and I probably have a solution. If it's not myself, I probably know somebody that can help them out.
And any amount that, as far as ranges, any amount at all?
My minimums are $100,000 and up to infinity.
Okay.
Minimum loan amount's $100,000.
Just out of curiosity, what's the biggest loan you've ever worked on?
$3.3 million.
Okay.
Yeah.
That would buy a nice house.
Yeah. One in Sarasota.
That's
a doctor.
Good. And any I guess probably commercial ones are bigger, but they're that'd be different. And so your day-to-day schedule, just give us a day in the life of James Stojak.
Monday through Thursday, 9 to 11, I'm on the phone making outbound calls. Monday, I'm making calls to my referral partners, typically realtors. Tuesday, I call it Just Ask. I'm giving updates on each loan to my selling agent, my buying agent, the client, the title company, where things are in the process. They appreciate that. They may get a second call during the week if something else comes in. Wednesday, I'm calling 40 of my clients, 9 to 11. Thursday, I'm calling my pre-improve and looking. The remainder of the day, I'm working on loans that are in process. So the first part of the day is really actively going out and trying to find new business.
Okay. So it sounds like you're engaged with your customers on a weekly basis.
I am.
All right. And that's probably an advantage, because I think that if people are trying to close that deal and buy property, having someone that's getting back to them or answering their questions, in advance of issues they may have is probably very compelling as far as improving their comfort level. So besides that, tell me what makes you spectacularly special in the mortgage industry.
Well, as I mentioned,
you can give me 10 or 15 things.
No. Our team really primarily has over 40 years of experience, so that's important to know. And I think my background of finance, I look at things a lot differently than most mortgage people do. Again, I do a full profile. I try to find out all the needs that are important to them. It's not just a mortgage, again, make sure they're, planning for retirement properly. If they have kids, college, education put aside. If they have a mortgage, they have term insurance to cover it for the loved one. So there's a lot more that goes into it than just selling a mortgage. I mean, I bring those accolades from my background and basically help the client, see the big picture.
Okay. Well, that's good, because it's more than just here, sign, you get the mortgage, have a nice day,
Right.
and good luck. If you're looking into their lifestyle and their family needs, that's pretty good. What else?
Well, I could say when I call my clients every Wednesday, I can go back over the last from day one. My clients know who I am. I don't call and talk about mortgage, talk about their family. I got a weird mind where I can go back and I know about their kids, their dog, and their family. If you ask about my stuff, you'd have to go to my wife and get an update. But I know my clients intimately, and they appreciate that call, because we're not talking about a mortgage. We're talking about, how's their lifestyle going, how's the kids doing. They appreciate the call.
Okay, so when there's the Palm Harbor Mortgage Advisors, what's it called? The Trivial Pursuit game, you'll win.
Always.
That's good. All right, so What else do you like to do? I know mortgage, obviously, you're quite passionate about that. If you haven't noticed, he is quite passionate about this business. And from speaking to other people in the business, bankers I know personally who have sent him referrals, they've all been impressed. The people that he knows, the people that whose lives he touches, have always been impressed. I think that speaks volumes of how hard he works for his clients and how successful he's been, because obviously he's a detail kind of oriented guy, and possibly a little bit OCD, but that probably works to your advantage if he's not missing any of the important points that can often be missed when you're shuffling stacks and stacks of paper. And I'm sure the missus has a little bit to do with that, with making sure that everything is in order. So what? Oh yeah.
Hey, I got one other thing I want to add too before we move on. There's a program out there right now. It was called Hometown Heroes, which now is for first-time home buyers. Okay. So the qualifications are: if you haven't owned a home in the last 3 years, you have a 640, minimal credit score, and basically you're making under $130,000 a year. What it qualifies you for is they're going to donate 5% of the loan amount. So in other words, let's say somebody's getting $15,000 in proceeds from the state of Florida. They can use that money in a combination of down payment and closing costs. I closed one last week for a gentleman that's works at Marine Max, a boat place. He's a mechanic or whatever, but he basically got like $16,000 from the state, and he only had to bring $1,800 to closing. So it's an interest-free loan. You don't make a payment for the life of the loan, so they're giving you basically free money, interest-free. You pay the $16,000 back when you sell the house or refinance it. So it's one of the best programs out there, the best first-time homebuyer program I've seen in my career.
And that's for Floridians only? Florida
residents, and it's got to be a Florida-based business as well.
And first-time buyer? No, it's just I missed the first part. For veterans?
First-time home buyers, people who have not owned a home in the last 3 years. So it could be anybody. It used to be professional-driven. Now it's just categorically for somebody that's not owned a home in 3 years.
And that is... So not necessarily first-time home buyers, but haven't purchased a home in 3 years.
Yeah, and they call it a first-time home buyer, but right, they can own a home, but it's got to be past 3 years. In the last 3-year window, they cannot have owned any real estate, whether it's investment property, second home, or primary. That's technically a first-time home buyer now.
And that was that was passed this year by the legislature?
On July 1st, Governor DeSantis dumped $100 million into the kitty.
Excellent. Now that lasts for how long? Till the money's gone?
Till the money's gone.
Wow, that's pretty good.
It's going to go quick.
That's amazing.
Yeah.
You did mention that before, and I forgot all about that. That's quite good. So if you are a first-time home buyer, or you've moved to this area recently, as over 600,000 people did last year from other parts in the country, we're number one in people migrating to the Sunshine State, which is pretty good, although the traffic will say otherwise. So if that's the case, and you need some help to close that mortgage, please give Mr. Stojak a call, because if they're doing 5% of the loan amount, really 5% of loan amount. Is there a maximum amount that they?
Yeah, up to $35,000.
35 grand. So that's huge. If you get 35 grand of basically free money, they don't have to pay back until you sell the home. That's amazing.
Yeah.
That really is. So in another minute and a half or so, when you're not doing these amazing mortgages with people, what else you like to do? You mentioned before that you play ping pong, was it?
No. I like to go fishing. We don't do enough of it, obviously, but bought a boat a couple years ago, which should have done this 20 years ago living in Florida. But my son and I like to go offshore. We go out between 60, 70 miles. Mm-hmm. And the last trip a couple weeks ago, we went out at 5 a.m. in the morning, got back at 5 p.m. So it was a 12-hour trip, long trip. We came back with 26 keepers on the boat. So we had a great day, good family time, with my son out there all day. So it's a lot of fun. And that's one of my passions is fishing. Don't do enough of it. The other is I play competitive softball. I play in a travel team. We play in a tournament once a week. It's called the Florida Half Century, and we travel around the state of Florida. So it's a bunch of ex-jocks that are very competitive. They rank teams from 1 to 100, and you're bracketed every month based on where you rank.
Okay.
So we play 4 games on a weekend.
How are you ranked right now?
We're ranked number 5.
Number 5. That's very good. And what's the name of your team?
It's called the Silver Rays.
The Silver
Rays.
Silver Rays.
Silver Rays.
Silver Rays. Okay, that's good. And what position do you play?
I play second base and third base.
All right. So he likes action there when he's playing baseball. Well, that's excellent. And you've been married how many years?
31.
31. I think I have 1 year on you on that. Yes, that's it. And
I'm catching up to you.
Yes. Well, hopefully you never will. Well, ladies and gentlemen, I just want to thank Mr. Stojak here. If you end up having any questions, I'm sure you will. All right. His contact information is Palm Harbor Mortgage Advisors, and it's the email is palmharbormortgage.com.
James Stojak at Gmail.
And your email is jamesstojak@gmail, and that's spelled James as in James, and Stojak, Stojak, correct?
Yep.
.com. And the office number there is 727-542-3357. 727-542-3357. And he can be reached apparently day or night because that's kind of the business. All right, I want to thank you for being here today.
Pleasure.
And, I'm hopeful that people will take advantage of your knowledge, your expertise, and your passion about mortgages so that they'll have a much better experience when they're going through the biggest purchase they will ever have in their lifetime, which is pretty cool. So at my office, back to Tarpon Total Healthcare, we have some changes that have happened recently, and there's some staffing changes. There'll be an email going out to everybody today at noon, so we have that right now. And suffice it to say that we'll be able to take care of all the patients that are concerned. This Tuesday on I think it's the 25th, we're having our BYOB, which stands for Build Your Own Business, not bring your bottle, whatever. So this is a business networking group that basically is free of charge. Come in, you can just mingle, schmooze, hand out cards. It's at 400 East Tarpon Avenue, Tarpon Springs, Florida, in beautiful downtown Tarpon Springs. Our clinic has been there since 1980. So I think we're the longest freestanding clinic in the entire county in one location, which I'm very proud about. I like to always acknowledge my staff because I have the best staff in the world, and had meetings this morning just to acknowledge that with them. You can join us at our Facebook. Find us on Facebook at Tarpon Total Healthcare. Our email is 123tthc@gmail.com. And if you have any questions or concerns, please give us a call. As always, we invite people to come in the office to visit. If you want free second opinions, we can offer those to you. And the other thing about the office is we do have different technologies, the digital motion x-ray, cold laser, non-surgical decompression, that helps our patients immensely to stay away from surgery. And since that's always the goal at Tarpon Total Healthcare, get our patients to be as good and healthy as possible, as quickly as possible, it's something that we'd like to share out there. So again, Mr. Stojak, thank you for coming out. Those of you that are going to be in Tarpon Springs next Tuesday, please come on by. Come by 400 East Tarpon Avenue. Look for the time and temperature sign. We look forward to seeing you there, and you can meet. You can't make it next Tuesday.
I think I will be there, yeah.
He'll be next Tuesday.
Yeah.
Fantastic. Yeah. So that ends the program for today. I want to thank you all. We'll see you next week for I Stand Corrected.